Everybody. Happy Easter, happy Passover, happy whatever you happen to be celebrating this weekend as we head into trade April week 3, 2020. Just wanted to go over the note that I left for you guys Wednesday night. I posted this a couple hours after we closed on Wednesday, and it was to get you prepared for Thursday morning. And I've been posting these notes since we got into that August sell-off last summer. A couple people had direct messaged me and thanked me, saying, I think this is a really helpful thing, more so than just blasting us with 30 tweets during the day. It's good to come back and read something to get us sort of recapped on the day before and looking at the day ahead. So I took that to heart, and I've been trying to add that to this private account every day. So for those who are new, this is something that I try to pin every day for you guys. And for those who are old to the account, or who don't really maybe visit as much as they used to, or don't realize that I'm doing this, here it is. And this one in particular really came true. Almost every single thing said in here. So let's take a look at this. The main theme coming into Thursday was the 8:30 a.m. weekly jobless claims number. And that overnight we would get some industrial production data from the UK and from Europe, as well as a GDP reading from Europe, and the overnight futures on that. And that if you do see something, if you do wake up and see that there was a huge dip in futures overnight, that was probably the cause of it. And that the big level for coming into Thursday was 27.11 SPX, and that next we would go on to try and take out the 2020 halfway back at 27.92 to 93. And that if we can get over that level, the next level we're going to move on to is up through 2800 and to 2855, which is where the February low. When you look at a daily chart, you can see that sort of weird candle that dipped down on the last day of February. Was a Friday. We slammed down to 2855, and then to start off March, we bounced back up and tried to get back up and stick the landing above 3,000, but then we got slammed again, and we got into all those lock limit down opens, that we had at the beginning of March, and so on and so forth. So right now we're dealing with all of that stuff, those levels right above us. And that if we sold off instead, we should be looking towards that weekly 200 SMA level, because another close below that would give us a fourth week in a row, but a close back above it would break the pattern and sort of leave us in a more bullish spot, because it will sort of begin to wipe away the possibility for our 1890 target hitting. I'm going to go back and show you all this in charts. And then I talked about what I liked in options, and I talked about what I liked in options for calls and for puts. And then I also said, at the end, if you're in that state of mind where you're convinced that we're going to get a sell-off and you want to be patient for that, that's fine. You don't have to play calls. You don't have to listen to any of the bullish analysis, but please take it easy and realize that we could go much higher before we're done. And that, if you're buying puts too soon, you're going to just watch those, $11 or $11 puts go down to, half of what you bought them for, if you're not prepared for just how high we could go. So anyway, that's what I said in the note, and this is what happened. On our 5-minute chart, you can see, oops, try to get this. Here we go. On our 5-minute, gap up, open, and hold well above 27.11. 27.11 was all the way down here. In pre-market, though, in ES, I wanted to show you this as well, because I thought this was kind of interesting. I apologize for this weird pause in my video. Okay. In pre-market, here was 3:45 a.m., and then obviously some spooky economic data out of Europe came in, and we got slammed down to 27.01. There was a 10-point spread on the close on Wednesday with SPX. That means SPX was trading 10 points higher than ES was on the bell. So of course this 27.01 that they slammed us down to translated exactly to S&P 27.11. So boom, there was our number to hold. And so anyway, but as you can see, also futures came rallying back by the time we opened, and so on and so forth. So here was our gap up open on the S&P, and you can see here was our 2020 halfway back level, and we looked above it and we chopped back and forth above the low, and then we made this valiant rally up over 2800 in the afternoon, but that kind of ended right around around 1:30, 2 o'clock. Eastern time, and we got slammed back down to a new low of day, and then finally came back at the end of the day, tried to close above that halfway back level again, but closed just a smidge off of it. The halfway back was 27.92.69, and our close on Friday was in the 27.89s. So missed that by a couple of points. When we look at this on the roadmap, we can see that what we also ended up doing was taking a look above our bear fork median line and kind of stopping dead on just below, getting into this next set of gaps that would take us up towards the 50-day simple moving average. And that's stuff that I was talking about that happened at the end of February, beginning of March. And when we look at the roadmap backed out a little bit more, I can show you it a little bit better. Here was February 28th. We slammed down to 28.55, and then the first few trading days of March, we tried to trade up higher, and then we got into these huge gaps that were lock limit down opens, where we opened and down 7%, and they just lock limited us. And then we came back at the end of the day and tried to repair some of the damage, but then the next day it just happened again and again. So sort of like just sliding down a cliff. And right now we're working our way back into those levels. And right ahead of us would be this 28.55 level from February 28th, followed by getting into this next set of gaps. And then, of course, the 50-day simple moving average is right in front of us. And as you can see, there was quite a battle back here to regain the 10-day, regaining the 20-day, failing that, regaining the 10 and the 20-day here. So there's going to be a battle when we get to the 50-day, just like we saw back here. Okay, so one other thing I wanted to show you regarding these forks, the median line and the bottom of this bear fork, I wanted to show you something about that as well. And I've got that chart somewhere here. That is in close-up. Let me see where I've got that. I'm going to ruin my whole video that I just spent all this time trying to get you guys daily forks backed out. Here we go. I apologize for the delay. Okay, here is what I'm talking about when you see these forks backed out. This is a really, really major bear fork because it comes from this all-time high that we set in 2018, the slam down that we got into Christmas 2018, and then the massive move from that low to our all-time high, which we set in February of 2020. And when we, plot a fork off of those points, here is the median line of it. Here is the bottom of it. Our low was a look below intraday, but it closed back above the bottom of this fork. And our high that we just stuck on Thursday of this shortened week was a look above the median and a close back below it. So I think that there's something interesting going on here as well. And if we are to look above this and trade higher on, at the beginning of next week on our effort to get towards the 50-day simple moving average and get towards this February low from over here, look where this median line of this old bull fork that we had been trading in sits at. That's right in line there with that February low. So there's a lot of things lining up, the planets all aligning for us to maybe make a move towards this February low, but fail underneath the 50-day and then finally get our back test. So if you are looking to get into some puts, that's what I would be waiting for. I would be waiting for this move up towards 28.55 or so. Here's that February low. This is that same fork chart, but in a closer view. Here's where that median line comes in, and if we look above that median line and maybe fail against the 50-day simple moving average, which is moving down, it's probably going to still be above 2,900 on Monday, but if we go into Tuesday and still try to be rallying, this will be just below 2,900. And maybe that's going to be the whole thing, that just the straw that breaks the camel's back, is that we fail at this median, fail at the 50-day, fail at the 2,900 level, and roll over from there. And at minimum, come back down and test the 10-day. And if that breaks, test the 20-day. And if that breaks, then we fully back test the low that we've set for the year. Finally, we'll get that back test that everybody is looking for. Okay, I hope that this helps you out and sort of gives you an idea of where we're at. I do think that we have one more, at least, day up because of the fact that Europe is closed, Canada is closed on Monday. It'll be just the U.S. So we have thin volume. We have the ability to sort of push things around, and then maybe at the end of the day we get some sort of a profit taking session, or or maybe we stay high, but we get JPM earnings, JP Morgan earnings, and Wells Fargo earnings before the market opens on Tuesday. So I would be really cautious holding calls overnight Monday into Tuesday, even if the market closes on the high. I would hedge them or just take your profits. And if we trade a little bit higher on Tuesday and you miss that last bit of profits, that's okay, but it's not worth the gamble that the setup might be that we close and stick the landing on a high on Monday, only to have a big sell-off pre-market because of some scary comments and some really bad guidance and some really nasty earnings from JP Morgan and from Wells Fargo in pre-market on Tuesday. Okay, that's it. Have a great rest of your weekend. I hope this video helped you out. As always, good luck and good trading.